This is his bailiwick. That's all.
Jeff Sica is with us. Now, we know him as his commentary on the stock market, but he loves to chuck his hat in the ring of politics anytime we offer him the opportunity, don't you?
Well, you know, this was...
Yes, you do. Go.
This is interesting because a lot of the Pope's critics have been accusing him of falling on the side of socialism. And, you know, there's a fine line between being a socialist and being a compassionate person. So I think what we're going to begin to see is where people line up politically behind the Pope, because the Pope is, in fact, a political figure in a lot of ways.
But compassion isn't socialism, which destroys lives. The free market and capitalism is the most compassionate thing you can give humanity.
Well, I know that, and I'm saying specifically because of the Pope's critics, they're saying that he's talking about income equality, and that is a controversial topic. And I think, you know, the Catholics are very, very definitive in terms of whether they support this Pope or they don't. He has broken the traditional mold.
But it's interesting that he would invite Bernie Sanders. Of all the candidates running for the presidency of the United States, he invites Bernie Sanders, the Democratic Socialist, to come to a conference on the world economy and morality. That's interesting.
And it's who he didn't invite, which is interesting to me, because if he really wanted to get involved with politics, and keep in mind he said stuff about Trump in terms of the wall. If he really wanted to get involved in politics, why not invite everybody? That's what I find interesting, and knowing that, you know, his message has been compassion. Is it compassion or is it socialism? And only time is going to tell.
Since you are a market bear...
we have to bring that up.
Yeah, well, we have to bring that up because you think the market's going to go down. Well, look at this. I know you've had this on your screens for the last hour and a half, but nonetheless, we've got a triple-digit gain. Dow Industrial is now up 129, 130 points, 17.6. But you still cling to... that's pejorative. You still believe that sooner or later, the mess that's being made by the central bankers around the world, we've got a picture of you there as a bear, you believe sooner or later it hits us and we come down sharply. That's still your belief?
Yeah, ignorance is bliss until reality shows up. And this Fed has been successfully able to inflate this market exponentially. Now we're dealing with the ominous possibility and likelihood that earnings are going to be disastrous. The fact that from earnings peak till now we've seen this decline of 18.5%, it makes it real obvious that there are some numbers that are going to come out that I believe wholeheartedly are going to shock investors.
Profits a year ago were 18% higher than profits now.
From 2014, the peak,
till now. Peak, until now, down 18%.
18.5%.
And you think that when we get these earnings reports, there's an earnings season, it's coming up, you think at that point there'll be some pretty bad numbers.
Right, because...
And that'll be enough to take that down.
Yeah, keep in mind, there's been about an 8.5% warning of an 8.5% decline. Right now, you could stay with the Fed rhetoric, with the linguistics of the Fed.
Well, yesterday, Janet Yellen says doesn't expect a recession this year.
Not only did she say that, she also said she didn't see that asset prices were inflated, which I think is a horrendous thing to say, that all of a sudden she's becoming all-powerful, that she could determine what asset prices are inflated and what are not. Even today's rally, this is all based on false confidence. You have to, one thing that you cannot escape, and which is why investors have to protect themselves, is you cannot escape this constant compounding of debt and this earnings recession. This earnings recession is what I've been saying all along is what's going to bring down the market, and nothing is really getting better when it comes to earnings.
Listen to this. J.P. Morgan's chief, a very well-known banker, Jamie Dimon, he says the country is facing economic disaster, I think that's his words, unless politicians quit scapegoats and ideological wars. Basically, the man's saying we're not touching Social Security and health care. There's no reform. We're going deeper and deeper into debt. The crunch comes. Now, he's putting a 10-year horizon on it. I think you'd pull it closer, wouldn't you?
I would say much closer, and I would say what he's responding to is something that Jamie Dimon knows very well. There is a dynamic happening among the banking system which is being negatively impacted by what the Fed is doing. Okay. So even though he's saying that and let's face it, Politicians are fighting. They're not offering any solutions to anything. They're just infighting. They're not talking about how are we going to deal with GDP, how are we going to deal with debt. They're fighting with each other. And what Jamie Dimon sees is what I believe is going to be yet another part of the unwinding, the unraveling of this economy and market, which is the banking system, which is very vulnerable. Look what's happening in Europe.
So you've dealt with the Pope, you've dealt with Janet Yellen, and now you've dealt with Jamie Dimon in the space of about 3 minutes. Yes. That's pretty good going. Let me tell our audience about some big names that everybody knows.